Dennis and I have been consistently investing on our own, taking a do-it-yourself or a DIY approach for the past 4.5 years or so now, and we've both definitely seen the most growth inside of our investment portfolios over the past 1.5 years or so. For me specifically, I hit an $100,000 net worth back in March of 2024, and at that time, I had about $81,594 invested, and that was mostly inside of my tax-free investment account at that time. Then I ended up hitting an $175,000 net worth in February of 2025, so just earlier this year. At that time, I had about $157,517 invested, and by this point, it was in a mix of my first home, tax-free still, and also retirement investment accounts. Then I recently hit a net worth of $200,000 just in July of 2025, so very recently, and it's actually grown a little bit since then as well. And I currently have $194,617 invested, so that's as of right now, and that's again in a mix of my tax-free, first home, and retirement accounts along with my taxable investment account as well. So from that breakdown, you can see that my net worth and my investments specifically inside of that net worth have grown pretty dramatically over the past year and a half or so. Now, some of that growth has definitely come from my own contributions. So for example, I invest $2,000 a month every single month. On top of that, I've made other big lump sum contributions, like from our year-end bonuses that Dennis and I pay ourselves out, from the inheritance I got from my grandpa last year. But on top of that, the rest of the growth that I've gotten has also come from my investments themselves going up in value. And to me, at least from my point of view, that's the really, really interesting part. Now, it's interesting to me for a few different reasons. First of all, the stock market's always going up and down over the short term, but it's historically always trended upwards over the long term. Now, for context there, 4.5 years, that would still be considered pretty short term in the investing world, at least. When we're saying long term, I'm thinking more like multiple decades. So for example, just this year alone in 2025, I saw my investments go down almost all the way in value to basically no return at all. We can actually pull up my investment app on screen here so you can see exactly what that looked like at that point of time. And now, just a few months later, at the end of August 2025, you can see that my growth of my investments has gone up substantially since then. So in this video, both Dennis and I are going to take you inside of our investment accounts, so show you what they look like right now, how much we've contributed ourselves, what the actual current value is at this point in time, and also how we feel about our investments and what's been going on inside of them. So let's jump into it right now and start with Dennis's investment accounts. Before we get into that, I wanted to remind you guys that we're hosting a live kickoff call for anyone who joins our course, Simple Investing for Canadians, before September 15th. We'll be doing a full intro to the course, a live Q&A session where Dennis and I answer any and all of your money-related questions that you have, and we can actually chat back and forth about them. And we'll also be doing a goal-setting session so that we can know exactly where you want to be when the course is done, which is going to be so much fun. You have until September 15th to sign up if you want to be included in the kickoff call, so make sure that you sign up at the link on screen or down in the description box below, and we'll see you live on September 15th.
Okay, so like Steph said, let's start with my investment portfolio. So you can actually see right away here that I have a total of $142,460.30 across all three of my accounts. Honestly, I want to start by saying that seeing that amount is still very, very exciting to me and really motivates me to keep going. So much so that I can't wait to hit $150,000 in there, and I also can't wait to hit $200,000 in there, and so on and so forth. Now, keep in mind that that total is the current value of my investment portfolio. When your money's invested, it's constantly fluctuating, and sometimes it's going up and down slightly, and sometimes not so slightly. The thing is that Steph and I are long-term investors across all of our accounts. So those short-term ups and downs, or those fluctuations in the short term specifically, don't really bother us and don't really mean that much to us, honestly. What we're looking for is that slow trend upwards over time. And we've actually been starting to see that inside of our investment portfolios, especially now that we both have over $100,000 each, which has been pretty cool to see. Now let's look at how that $142,460.30 is broken up across my three accounts. The first one is my tax-free investment account. So This account is actually currently sitting at $103,955.28. The maximum contribution limit that I have within my TFSA is $82,000. So what that means is that when I turned 18 and became eligible to open up a TFSA, I've actually built up $82,000 worth of room, and I'm not allowed to go above and beyond that or contribute above and beyond that specifically. I was actually able to max out my TFSA for the first time last year, which was a really big milestone for me. So that means that I've contributed that max of $82,000 into the account, and then the other $22,000 or so that's on top of that $82,000, that's actually growth that's come from my investments growing inside of that TFSA. Now, at this point of my investment journey, I only have one investment inside of my TFSA, and that's an ETF called XEQT. An ETF is a fund, which is a basket of different investments that's been all put together for you. XEQT is a fund that's made up of 5 other funds inside of it. So you have 2 funds that hold US market stocks, you have 1 fund that holds Canadian market stocks, you have 1 fund that holds developed market stocks, and then you have 1 fund that holds emerging market stocks. So what that means is that you have a globally diversified portfolio that's held inside of a single investment, this ETF called XEQT. Now that's where my TFSA is at right now, and I'll continue to invest in XEQT whenever I gain more contribution room every January. Next up is my first home investment account, so my FHSA, and it's currently sitting at a value of $17,846.77. This is an account that was created in 2023 specifically with the intention of helping people save money in order to buy their first home. It has an overall maximum lifetime limit of $40,000 for everyone, and that room starts building literally as soon as you open the account. Once you open up the account, you get $8,000 worth of room every year for 5 years until you hit that total of $40,000. Now, a lot of people will use this account as a short-term investment account because they aim to buy a house a few years after they start saving for it. And in general, you're only even allowed to have this account for 15 years. Well, Steph and I don't plan on buying a primary residence for at least 10 years. At least that's the plan as of right now. So I'm still investing in the same ETF, XEQT, which you guys know that I invest in my TFSA, which I'm also using for long-term investing. Anyways, I personally opened up my FHSA in 2024, so my max contribution limit is $16,000, and thankfully I was able to max that out at the beginning of this year. So I've contributed $16,000, and then the other $1,846.77 has come from the growth of my investments. Now, my last investment account is my retirement investment account, also known as my RRSP. Now, the current value within my RRSP is $20,658.25. So some of you guys might actually remember that last year I was finally able to roll over my old pension plan. So literally from like 4 years ago into my personal RRSP, and that was about $10,000, which gave me a good base amount to add to this account from when I first started investing inside of it. Then I remaxed out my TFSA and my FHSA earlier this year. So after that, I started putting my regular monthly contributions of $2,000 into this account. So basically throughout 2025, I've been actively building it up. So right now I've contributed a total of $18,700, and then the other $1,958.25, that's all come from the growth of my investments. By the way, I actually don't invest in XEQT inside of my RRSP. Instead, I invest in VXC, and Steph is actually going to talk more about VXC when she walks you guys through her portfolio. But in general, it's still a passive and globally diversified ETF, just like XEQT is. So that's it for my investment portfolio and where it's at. Now let's get into Steph's accounts.
Okay, so now it's time for me to pull up my investment accounts. So let's start from the top here. From the top, I have $194,617 right now across all 4 of my different investment accounts. So again, what that means is that it's for all 4 of my different investment accounts combined. And if we scroll down here, you can see what those 4 different investment accounts are. So let's start specifically by talking about my tax-free investment accounts. That's my TFSA. You can see here that it's currently sitting at a value of $99,647. Now, it actually hit $100,000 for the first time earlier this week, which was really exciting to see. But right now it dipped right below that. So $99,647 at the moment. Now, keep in mind that this is the value of my account. So for my TFSA specifically, I actually only have a maximum contribution limit of $76,500. So kind of like Dennis touched on earlier too, if you were born in the same year as me, then you might have the same same TFSA max contribution room as me or whenever you became eligible for a TFSA, but it is different depending on when you became eligible. So keep that in mind. But what that means for me is that I've actually only contributed or put in $76,500 into my TFSA, and the other $23,147 is all the growth of my investments on top of that. Now, this amount is always going to continue to fluctuate. It could be in a totally different place. In fact, it definitely will be at a different value when I do my next update, probably in January 2026. It could be higher than it is today or potentially lower, even though I haven't contributed any more money between this period of time. Now, what I will say though is with my TFSA specifically is that it's one account that I'm planning on using for retirement, right? So it's one I'm not planning on touching for a long, long period of time. So even though I could, in theory, take money out of my TFSA to use and spend on something because it's in a flexible investment account, I'm not going to do that. Instead, even though it's going to fluctuate up and down over the short term, I'm going to let it continue to slowly trend upwards for the long term and use it in the future and not sell any of my investments inside of it until then. By the way, I only actually have one investment inside of my TFSA, and it's the exact same ETF that Dennis invests in, which is XEQT. And my plan for my TFSA is the exact same as what Dennis touched on too, because of course we're aligned on that. And that is to continue to invest in XEQT inside of my TFSA whenever I gain more contribution room every single year. Okay, so now let's look at my next investment account, which is my first home investment account. So this is my FHSA, and right now it's currently sitting at a value of $18,888. Eight's one of my favorite numbers though. I very much enjoy how it looks right now. Now, just like Dennis mentioned before, the FHSA, so this account for most people, is probably going to be used as more of a short-term investment account because a lot of the time when people are looking to save up to buy their first home, they're aiming to do so in a pretty short period of time. Now, again, like Dennis mentioned for us, because of course we're on the same page with this, we're not planning on actually doing that for at least 10 years. At least that's the plan right now. So because of that, I don't need to make any changes to the way I'm investing in my FHSA compared to my TFSA, since I'm still using it as a long-term account that's going to be invested for at least a decade. So because of that, I'm investing in the exact same ETF, XEQT, that I am inside of my TFSA. So I opened up my FHSA in 2024. So since then, I've gained $16,000 of contribution room inside of my FHSA, which is the $8,000 for 2 years, $16,000 total. And because I've maxed this account out, it means that I've contributed that full $16,000 that I'm allowed to. And the additional $2,888 in value in the account is the growth that my investments have had by going up in value on top of the contributions that I've made. After that, we have my retirement investment account. So this one is specifically my RRSP, and it's currently sitting at a value of $71,943. Now, this account is another one that I'm using, like I said before, for retirement, so for the long term. Now, my personal maximum contribution limit inside of my RRSP is $61,985, and I was actually able to max out my RRSP for the very first time this year in 2025, which is really exciting because it was a few years ago I maxed out my TFSA for the first time, last year my FHSA for the first time, this year my RRSP for the first time. So very exciting, and what that means is that I contributed the full $61,985 that I'm allowed to contribute to it, and that also means is that the other $9,958 worth of value sitting in the account is the growth that my investments have had since maxing it out. Now, just like Dennis, I also invest in a different ETF inside of my RRSP. I specifically invest in VXC. Now, VXC is still a passive, globally diversified ETF, just like XEQT is, except with VXC, it actually completely excludes Canada altogether. The title of VXC, like the actual title of the ETF, actually has global excluding Canada in it for that exact reason. Now, we've talked about this before in our other videos in the past when we started investing in VXC inside of our RRSPs. So many acronyms that I'm saying right now. But I wanted to touch on it again, the fact that it isn't actually necessary to invest in additional ETFs. XEQT itself is designed to be an all-in-one ETF that gives you that global exposure that you can hold actually in all of your different investment accounts. We just personally, and again, this is a personal choice, not necessary, but felt like we were a bit over-invested in the Canadian market since XEQT does have 25% of its holdings in Canadian stocks specifically. So we decided to include VXC in our overall stock market investment portfolio to bring down the Canadian exposure a little bit. Now, maxing out my RRSP this year was very exciting for me. It's technically the third investment account that I've maxed out now, but it also marked the end of all of my tax-advantaged investment accounts. So I maxed out my TFSA, TFSA, then FHSA, and now the RRSP. And it means that I've had to move on to my taxable account after that. So it's been a very exciting milestone. I'm also very excited for Dennis to max out his RRSP next. That's the next one that he's gonna check off the list too. And once he hits that point, it'll just be us continually remaxing out all of these accounts together, individually together, both, every single year when we gain new contribution room. Now, like I just mentioned, because I've maxed out my RRSP, I've since had to open up a taxable investment account as well. Now, the current value of my taxable account is sitting at $4,137. Of that, I've contributed $4,015 myself, and the other $122 worth of value in that account is from the growth that my investments have had over the past only few months or so. Now, my plan for this account is to just invest inside of it whenever my tax advantage investment accounts are all currently maxed out. So for the rest of this year, September, October, November, and December 2025, I'm going to be putting my $2,000 a month investment contribution towards this account, my taxable account. But as soon as January 2026 hits, I'm going to be remaxing out my TFSA, FHSA, and RRSP in that order until they're all maxed out again. And if that point hits throughout the year, then I'll go back to my taxable account again. By the way, you can see that I've continued to invest in VXC inside of my taxable account too, just for the same reasons as I did inside of my RRSP. So that's it for all 4 of my investment accounts that I have right now, where they're sitting at, how I'm feeling about them as of August 2025.
So we hope that you guys enjoyed this look inside of our investment accounts right now. And remember that if you want to work on your investing journey this fall and you want to actually hit some of those goals, make sure you sign up for Simple Investing for Canadians before September 15th, if you want to join our live call that we're going to be doing where we walk you through literally everything. We can't wait to see you there and have you as a Simple Investing student. And with that being said, we'll see you guys next week with another video.